Well, everyone, thanks for joining me. Today, we're really going to dig into some practical, faith-aligned approach to budgeting and financial planning, especially for those who are navigating some seasonal sales and some inventory chaos right now. In Proverbs, we learn that the plans of the diligent certainly lead to profit, but anyone who is reckless becomes poor. And too many outdoor brands are hustling hard, but still feel like they're flying blind. And that's not really stewardship. That's just survival mode trying to get through the day. And we're going to fix that today. But first, let's kind of tell you who I am. I'm Jacob Curtis. I'm a CPA, a certified profit first professional, and your financial trail guide. My mission is really simple. It's to help business owners like you finally get paid, master your cash flow, and run a business that actually gives you some freedom. I started Curtis Planning Solutions because most business owners, you really don't need more spreadsheets. You don't need another system. You really just need a system that actually works, something that you can put into place and trust and it'll work. And even when inventory, seasonal swings, and cash flow is chaotic, right? That's what we're going to talk about today. So drop a comment, hit the like button, and let's dive in. So traditional budgets look backward, and that is not great if we're trying to move forward and grow the business. And that's what Profit First helps with. Profit First looks forward and uses the purpose-built bank accounts to help you stay on course and in budget, basically. Your income accounts is your staging area where all the money is collected. All the money that comes in from your customers goes into that income account. And then twice a month, you're going to allocate your funds that's accumulated there into your other 6 accounts, into your inventory, the profit account, the owner comp account, tax account, operating account, all the other accounts. So for example, if you've got $50,000 in revenue, you may allocate 45% or $22,500 into the inventory account, and maybe 30% goes into the operating account, and 10% into the owner's comp account, and 10% to the profit and tax accounts. That's not quite there. It's 105. So we have to do 5% of the profit, something like that. But that's how that works is you're budgeting the cash flow of the business that's actually there, because you may have a great budget in QuickBooks or on Excel, but if you don't look at it constantly, you're not going to be able to grow your business. And so we definitely want to manage the cash flow, because without cash, you're going to get in trouble. So projecting out where that cash is going to be is awesome. So we need to, one, make sure we're using the cash effectively in the business, where we've strategically planned to use it based on some allocations and best practices, and that will really help you to do that. So we're going to set some percentages and then let the system do the work. Now, businesses experience seasonal fluctuations, right? So your budgets should also adapt. So instead of just having a fixed budget every single month, you're going to save between 10 and 15% when swings are really, really big and booming. You're going to take a little bit and stick that into your, what maybe you call your seasonal reserve budget when things are a little slower, or your summer slow months, or your winter slow months, or whatever it is you want to call it. You have an account set aside, so when sales are really going good, you're going to take some of that extra to save for those slower months. This fund really acts as a safety net for those slow periods, covering your bills, your marketing, and making sure that you and your employees are consistently paid. Now, beyond seasonality, inventory management is really, really crucial, because inventory ties up that cash, right? You're going to pay dollars to get inventory, and then if you sit on there, it's going to hurt you. So you want to make sure that you're going to monitor your inventory to cash ratio to see how quickly products actually converts to money. And that could also be looking at your inventory turnover ratio. A high ratio with low cash indicates that your cash flow has a chokehold, meaning you have a lot of inventory and low cash. That means you've got a lot of money tied up in inventory, which could hinder your growth, could hinder you getting payments out on time, and maybe even payroll. So regularly checking on this ratio throughout the month, not just monthly, but monthly is important, but maybe even up to weekly, is really going to help you to ensure that you have a smart purchasing habits and ideas of what you're needing to help prevent the overstocking, and will help free up the cash to help smooth out the operations, make sure you can meet your payment deadlines and they're not running into a cash crunch. Open to buy is a super important way to manage your inventory, especially for retail, online, and e-commerce. This really acts as a dynamic budget that helps you answer the question, how much can I buy and when? So you're going to project out what your sales are going to be so that you know what you can buy. And open to buy process helps you avoid having too much or too little inventory, making sure that your purchases really match your sales predictions. And you adjust that every month for what actually happened. So for example, if you have a $20,000 open to buy inventory, that's your max investment that you can put out at the moment. So going over that can really tie up your cash and ultimately hurt your business. Again, spending too much on inventory can lead to sinking margins, because you're going to have to put everything on discount or something like that, which will eat into your profits and into your margins. It'll tie up some vital cash that maybe you could use elsewhere. from getting paid in payroll or bills or things like that, stopping you from really investing and running your business smoothly. It'll increase carrying costs of just having that inventory sit on the shelf or in the storage unit is going to increase. So you could have potential costs of storage and insurance and even some outdated items that now you won't be able to sell. You'll have to discount, again, cutting your margins. And then potentially even theft could happen really easily because you have so much inventory, it's hard to keep track of it all, right? Unless you have some really great controls around that. Could be the reduced flexibility because you don't know what's going to happen in the market. And so you basically bought in on a certain strategy. And if something changes, trends change, then you're stuck with something that, again, outdated inventory or something that's not going to sell very well. And it could potentially hurt your brand perception of how others see you, how your customers see you, because you're constantly discounting, making you look like you're a discount brand. And so that might be something that you want to take into account. Now, sticking with your open to buy amounts and numbers really offers some often benefits. It helps you optimize your cash flow so you know exactly how much cash you have, so you can use that efficiently. Improve profitability because you're not going to have to be marking everything down because you're too much. You maybe need to be able to increase your prices a little bit because there's some scarcity there. There's going to be a reduced obsolescence risk, which is basically it's not going to be outdated inventory, right? You're going to buy what you only need and not anything more. So you only buy what you need when you need it. There's going to be some enhanced agility because as the winds and trends, things change, you'll be able to respond to the market shifts and be able to adapt your business easily and be more agile. And you'll have better relationships with your vendors overall if you're making your payments on time, right? Your sales reps and things, that those are going to be way more easy to work with and offer you better benefits and terms if you are able to pay your bill. So in a nutshell, open to buy is a smart, data-driven way to handle your inventory, helping you boost your profits and grow your overall business. Now comes the next piece, which is financial forecasting. Though it can seem really complex, it's actually super vital for your business success. As we've already seen with projecting your sales and what your inventory is going to be, we also need to begin doing that for your monthly expenses. And you're going to use some of the historical data, market trends, and other knowledge that you may have. If you know that your rent increases every year, then you can plan for that and know, I'm going to have a rent increase in June, right? So that's what we want to do is project out those costs. You're going to deduct those fixed costs like rent, insurance, payroll, and then account for all the fluctuating seasonal expenses such as advertising, maybe increased staffing during those peak periods. And then finally use and implement and incorporate that open to buy process, those projected sales, the projected cost of goods sold and inventory purchasing to really manage and optimize the cash flow, preventing you from overstocking or understocking. That's also a bad thing. That's kind of how you do it in a nutshell. But you really want to get better at it at predicting the future. You want to break down your projections into high seasons and low seasons. Do this on a monthly basis over years. And you can project out where things are going to be, when it's going to be lower, when it's going to be higher. And this way, you're really going to have a super strong financial plan that helps you make smarter, better decisions and avoid problems and keep growing. So in God's economy, profit is a reward for good stewardship, not just a maybe if there's something left over, but it's what we want. Every allocation you do with profit first, you're going to take your profit first, right? And that's the whole idea of the profit first method is you're planning for profit, be a good steward. And then you're going to be able to build the rest of your budget around on what's left over. Even if that's only 3 to 5%, that adds up pretty quick. That's 3 to 5K for every 100K in revenue. Now, quarterly profit payouts will really show off that entrepreneurial drive and help reward you for working so hard in the business, reflecting all the hard work you've done, all the smart planning, all that successful budgeting. And that's a huge motivator, reminding you why you actually started the business in the first place to help you find a little bit of that financial peace and freedom. The next thing we want to talk about is actually your ad spend. You're thinking about marketing like a muscle. You work it harder when you're feeling strong and pull back a bit when you're feeling a little out of your element, a little weak. But you never stop exercising altogether. You need to make sure that you keep that marketing engine going. When your cash flow is really great, spend a lot more to get that in there, right? Try new things, build out your brand, and fine tune what you're already doing. When funds feel a bit tight, you're going to focus on what's actually working, what you know is converting, and make sure that you're going to get the biggest bang for your buck that you're doing. You're going to cut out anything wasteful, and you're going to stop anything that you're just experimenting with. You want to make sure that you keep your customers happy with what's happening. That's probably one of the biggest things is making sure you keep them happy. So if you stop marketing altogether when things get really, really tight, you're going to lose a lot of visibility and you're going to be forgotten, which it was going to kind of put you back in the cycle if it's even more difficult. And so it's one of the first things that I tell people when you're in a hard time, what marketing have you been doing over the last 6 months? Do we need to change that? What do we need to do to make sure that we continue marketing what can we focus on to really work out? So instead of always just keeping a baseline going with things like organic content and engaging your audience, we want to make sure we continue those things, encouraging word of mouth and offer those low cost tactics to get people in the door and to purchase from you. This flexible approach really helps you grow steadily and sustainable. So again, during those good months, you're going to experiment and try different things. During the leaner months, you're going to do the tried and true, what you know works. And marketing is important for businesses. So if you have any questions or need assistance with managing your family's finances, please don't hesitate to reach out. I'm here to help you. I'd love to talk with you. Go ahead and you can scan the QR code on the screen here to book a call with me. I'm here to help you turn every inventory chaos into predictable profit and experience some real financial freedom. Schedule that call by scanning the QR code or going to the website link there. And don't forget to follow me, Jake Pearson, Pearson Scanning Solutions on Facebook, Instagram, Pinterest, and YouTube. Thanks everybody for watching, and I'll talk to you soon.